You know I want you. It's not a secret I try to hide. I know you want me, so don't keep saying our hands are tied. You claim it's not in the cards, fate is pulling you miles away and out of reach from me. But you're here in my heart, so who can stop me if I decide that you're my destiny?
You think it's easy, you think I don't wanna run to you, but there are mountains and there are doors that we can't walk through. I know you're wondering why, because we're able to be just you and me within these walls. But when we go outside, you're gonna wake up and see that it was hopeless after all. No one can rewrite the stars. How can you say you're mine? Everything keeps us apart, and I'm not the one you were meant to find. It's not up to you, it's not up to me, when everyone tells us what we can be. How can we rewrite the stars? Say that the world can be ours tonight.
All I want is to fly with you. All I want is to fall with you. So just give me all of you.
It feels impossible.
It's not impossible.
Is it impossible?
Say that it's possible. How do we rewrite the stars? Say you.
So, ito kini nasa accounting nga wala sa ako. Asa mo ginagika ng accounting? Basta!
What is accounting? Accounting is an information system that measures, processes, and communicates financial information about an economic entity. It is useful in making economic decisions. How did it started? People have counted and kept records throughout history. The origin of keeping accounts has been traced as far back as 8500 BC in Mesopotamia. Traders use tokens to represent different commodities. These tokens were often sealed in clay balls called bullae, which were broken on delivery so the shipment could be checked against the invoice. Bullae, in effect, were the first bills of lading. Later, symbols impressed on wet clay tablets replaced the tokens. Some experts consider this stage of record-keeping the beginning of the art of writing. The earliest collections of understandable writing track how many bushels of grain came into the king's warehouse. Tablets recorded who brought in the grain and how much the king took as his share. Even in the early days, tax collecting is an activity closely linked to accounting. During the first dynasty of Babylonia, its law, which was based on the Code of Hammurabi, requires merchants trading goods to give buyers a sealed memorandum containing the agreed price before it can be considered enforceable. The agreed-upon transaction was recorded by the scribe, the predecessor of the modern accountant, on a small mound of clay with the parties affixing their signatures on it. In the Middle Age, Arabic numerals were used as a result of trade with the Near East, allowing columns of numbers to be added and subtracted. The use of credit was prevalent, and a semblance of an international banking system was also functioning. Inca Empire, which spanned the west coast of South America throughout the 11th to 14th century, used knotted cords of different lengths and colors called quipu to keep accounting records. Renaissance Florentine markets were a fascinating combination of formalization in the form of account books and double-entry bookkeeping and of informal social networks constructed out of the surrounding rules of Florentine sociality. The earliest evidence of business bookkeeping in Florence, France, was proved by the bank ledger fragments of 1211, but these were within the framework of the narrative or paragraph type of accounting record. Amatino Manucci was a partner in Giovanni Parocchi and Company, a merchant partnership based in Florence. Amatino Manucci was the inventor of double-entry bookkeeping. He managed to construct a comprehensive and fully articulated set of double-entry records, with a regular balancing procedure on closure of the general ledger. He used 5 books: General Ledger, 2 Merchandise Ledgers, Expenses Ledger, and Cash Book. Luca Pacioli is generally associated with the introduction of double-entry bookkeeping. In 1494, he published his book Summa di Aritmetica Geometria Proportioni et Proportionalita, which includes the details of calculation and recording, describing double-entry bookkeeping. He only described what were prevalent accounting practices of the day. Although Pacioli made no claim to developing the art of bookkeeping, he has been regarded as the father of double-entry accounting. The earliest systematized form of accounting regulation developed in continental Europe. The government introduced the submission of an annual fair value statement of financial position to protect the economy from bankruptcies.
Bilang dito na ng hotdog roll. Hey, gabi naman tayo. Pwede ba at 5% discount tayo? Hey, salamat!
Jack Savory stated, if this merchandise is starting to deteriorate or go out of style, or is that which one judges you could find at the factory or wholesalers at 5% less, it must be reduced to this price. In the 17th century, Nicolas Petri was the first person to group similar transactions to a separate record and enter the monthly totals in the journal, rather than recording all transactions in a series. The expanded business operations initiated by the Industrial Revolution required increasingly large amount of funds to build factories and purchase machinery. This need resulted to the development of the corporate form of organization. The growth of corporations spurred the development of accounting. Corporate owners, the shareholders, were no longer the managers of their business. Managers had to create accounting systems to report to the owners the result of their stewardship of the business. Eugen Schmallenbach was a German academic and economist. In the early 1920s, he was persuaded repeatedly with his failure to compare meaningfully the financial data made available by different companies. This led to a research on the problem and the publication of his book, The Model Chart of Accounts. Schmallenbach claimed that important information could be gained from a firm's accounts. The results of one's firm should show through flows more usefully than balances. What he termed dynamic balances were to be promptly and regularly prepared and presented, so that external changes in internal efficiencies could be gauged. In the year 10 CE, Qin Dynasty Emperor Wang Mang instituted an unprecedented tax, the income tax, at the rate of 10% of profits for professionals and skilled labor. To pay for weapons and equipment in preparation for the Napoleonic Wars, William Pitt, the Younger of Britain, levied an income tax in his budget of December 1798. The 1863 Union government established the Bureau of Internal Revenue to assess personal and corporate income taxes to help finance the Civil War. In 1943, the U.S. Congress passed income tax withholding as the only way to collect on high tax rates to fund World War II. The Philippines Bureau of Internal Revenue was created through the passage of the Organization Act No. 1189, dated July 2, 1904. On August 1, 1904, the BIR was formally organized and made operational under the Secretary of Finance. Dan Brinklin and Bob Frankston wrote VisiCalc for the Apple II, the first electronic spreadsheet. Spreadsheet is the most important business application for the personal computer. Tremendous advances in information technology have further revolutionized accounting in recent years. Tasks that are time-consuming when done manually can now be done with speed, consistency, precision, and reliability by computers. With the proliferation of netbooks and smartphones along with its mind-boggling array of applications, surely doing business will change. This will necessarily bring changes to the field of accounting. As they say, information technology is it. You either breathe it or perish.